The world is swimming in an ocean of debt. As of late 2025, the total has swelled to a jaw-dropping $346 trillion. That's a number so huge it's almost impossible to picture. It's more than 3 times the value of the entire global economy. Every country, every major corporation, and millions of us are all borrowing. But that brings up a really simple, almost childlike question that nobody seems to give a straight answer to. If pretty much everyone is in debt, who are we all paying back? Who's on the other side of this global IOU collecting interest on this mountain of money? The answer is way less dramatic and a lot more surprising than you might think. We're going to follow the money and figure out who really owns the world's debt. Section 1. The scale of the problem. Before we can find the owners, we need to get our heads around the sheer size of what they own. That $346 trillion figure isn't just one giant loan, it's a massive tangled web of different kinds of borrowing. It's mostly split into 2 giant buckets, public debt and private debt. Public debt, or sovereign debt, is what governments borrow. This pile is enormous, closing in on $100 trillion of the total. This is the money countries use to fund everything from new highways and military spending to social programs and crisis bailouts. The rest, a massive chunk of over $200 trillion, is private debt. This includes everything from corporate bonds issued by companies like Apple and Microsoft to bank loans, and of course, the debt in our own lives like mortgages and credit cards. In fact, debt from non-financial companies alone is rocketing toward $100 trillion, thanks to huge borrowing in hot sectors like AI and clean energy. So how did we get here? This mountain was built over decades, but its growth went into overdrive after 2 major global events. First, the 2008 financial crisis forced governments to borrow trillions to save their banking systems. More recently, the COVID-19 pandemic led to unprecedented government spending to keep the world economy from collapsing. The Federal Reserve in the US, for example, basically doubled its holdings of government debt to prop up the economy. Each crisis adds another layer to the pile, and the total just keeps climbing. It's not just the size of the debt that's staggering, but the speed at which it's growing. Which brings us right back to our main question. Who is cashing in on this explosion of borrowing? Section 2. The biggest owners are closer than you think. When you imagine a massive creditor, you probably picture a shadowy international banker or a rival superpower. The reality is far less exciting and much closer to home. Let's use the United States as an example, since its debt is the foundation of the entire global financial system. As of early 2026, the U.S. national debt is over $38 trillion. Of all that debt held by the public, a whopping 76% of it is owned right here in the USA. That's right, the vast majority of America's debt is owed to Americans. This is a complete flip from 1970, when foreign investors held only 5% of U.S. debt. So who are these American owners? They fall into 2 main groups. First, and here's the crazy part, a huge chunk is owned by the U.S. government itself. Various government entities hold about 20% of the total debt. The biggest single domestic holder is the Federal Reserve, America's central bank. When the economy needs a boost, the Fed steps in and buys up Treasury bonds. But it doesn't stop there. Other government trust funds, like the ones for Social Security and Medicare, also buy government debt. They take the extra money they collect from our taxes and invest it in what's considered the safest asset on the planet, U.S. Treasury bonds. So in a very real way, the U.S. government owes a huge portion of its debt to itself. The second major group of owners is the American public, although most of us don't own it directly. This category includes a whole mix of investors. You've got state and local governments investing their cash reserves. You've got private pension funds and insurance companies that need super stable, long-term investments to pay out future claims and benefits. And then you have the investment funds that manage the retirement and savings accounts for millions of everyday people. So if you have a 401k or a pension plan, chances are you are a creditor to your own government. You are one of the owners of the debt. Section 3. The foreign landlords. Okay, so if about 3/4 of the debt is held at home, what about the other 24%? That's the slice held by foreign governments, corporations, and individuals, adding up to a record $9.4 trillion for the U.S. as of late 2025. And this is where some of the biggest myths live. For years, everyone said that China was America's banker. And while China is a major holder, it's not the powerhouse creditor many people think. In fact, China has been steadily selling off its US bonds and moving more of its money into other assets like gold. The biggest foreign owners of US debt are actually America's allies. Japan is almost always at the top of the list, holding over $1.2 trillion. Right behind them is the United Kingdom, with nearly $900 billion. And if you look at the European Union as a single bloc, their collective holdings are massive. In recent years, a huge surge of foreign investment in US debt has come from European nations. So why do all these countries want to own American debt? It's not some grand conspiracy to take over. It really comes down to two things: trade and stability. When other countries sell stuff to the US, think Japanese cars or French wine, they get paid in US dollars. Because the dollar is the world's main reserve currency, these countries end up with mountains of dollars they need to invest somewhere safe. US Treasury bonds are seen as the safest financial asset in the world, backed by the largest economy on Earth. So they use those dollars to buy US debt, effectively lending the money right back. It's a giant self-reinforcing loop driven by global trade. Section 4. The paradox: the world owes itself. So when you zoom out and put all these pieces together, the picture gets really weird. The world essentially owes this $346 trillion to itself. There's no angry landlord on another planet waiting for our interest payments. The whole system is a closed loop. When a government issues new debt, the people buying it are mostly its own citizens and institutions. Data shows that domestic investors buy up around 60% of all new government debt issued worldwide. For emerging economies, that number is even higher. The creditors are the same central banks trying to manage the economy, the pension funds managing our retirement, and the investment accounts where we save our money. Even the foreign-held part is just another piece of the same web. A country like Japan buys US debt using the dollars it earned from selling cars to Americans, which in turn helps keep the trade system stable, allowing it to sell more cars. The debtor and the creditor are locked in a relationship where they both need each other to succeed. This entire $346 trillion system works because every single owner of that debt, whether it's the Bank of Japan or a retired teacher in Ohio with a pension fund, believes without a doubt that they will be paid back with interest. The entire structure is built not on gold or physical assets, but on trust. Section 5. So should we be worried? Knowing who owns the debt makes it less mysterious, but it doesn't mean the risks just disappear. You often hear national debt compared to a household credit card bill, but that's not really the right way to think about it. A government that controls its own currency has options that a family doesn't. Still, the dangers are very real. The biggest worry isn't a sudden demand to pay back all $38 trillion at once. It's the ballooning cost of the interest payments. In the US, interest costs are on track to hit $1 trillion a year. That's money that can't be spent on schools, healthcare, or scientific research. The second big risk is the changing face of who's buying the debt. More and more, new government debt is being bought by private investors like hedge funds. These investors are much more focused on quick profits and are far more likely to sell off their holdings in a panic, which could trigger a financial crisis. And finally, there's the simple challenge of having to constantly borrow more. With US debt projected to fly past $50 trillion within the next decade, the government has to find an endless stream of buyers. So far, the demand is there. But relying on that forever creates a massive vulnerability. It means a country has to keep the full faith and confidence of its creditors, both at home and abroad, at all times. CTA and conclusion. If this breakdown of global debt helped you make a little more sense of the world, do us a favor and hit that like button and subscribe for more deep dives. Now that you know who the creditors really are, let me know in the comments. Does this massive $346 trillion number still worry you? So who owns the global debt? The answer is, we do. It's owned by a tangled web of central banks and governments. It's owned by the pension funds, insurance companies, and mutual funds that millions of us are counting on for our futures. And it's owned by our international partners who participate in the same global trade system that we all rely on. The world's biggest debtors owe the money to the world's biggest savers, and in many ways, they're the exact same people. The real question isn't who owns the debt, but for how much longer this delicate system of trust can actually hold. So we hope that you like this video and don't forget to subscribe to the channel for more such content.